So who's going to win the US election, Trump or Harris? Well, the market has an opinion, and I will show you what it is. Plus, I'm going to do my normal analysis of the market, look for where the stock, commodity, currency markets are likely to go. And then at the end of the video, we'll look at the trade of the week. That's all coming up in this week's Stockscores Market Minutes. All right, let's get into that question. Is Trump going to win the election, or will it be Harris? Well, for the first time that I can think of, we have a stock that really represents one of the candidates, and that is the symbol DJT, which is Donald Trump's Truth Social, and it tends to rise and fall with events as they have an effect on his potential for the presidency. And it's quite interesting to watch. I'm going to walk you through the chart and show you some critical events on that chart, and we can start to see how the market moves as he gains popularity or perhaps as he loses popularity. And then ultimately I'll give you my sense of whether he is likely to win the election or not. Now, the reason this happens is the stock market is very efficient at pricing in new information. So DJT has moved with the rise and fall of Trump. So when he's in the first debate with Biden, stock did well. When he got shot, the stock jumped up on that because it was a sign that he was, a triumphant victor in the battle against evil, whatever you want to call that. When Harris became the candidate, then you started to see it slip. So I'll show you this in a chart in just a moment. Now, trading in DJT is very active, and that's what helps make it important because the market's efficient. You've got lots of people essentially voting in the market with their money using DJT as the proxy. And the idea is that if Trump wins the election, his business, DJT, Trump's Truth Social, will become more popular and perhaps even profitable, which it isn't at this point. If he loses, you would see that stock probably plummet quite hard. So let's take a look at the chart. We'll look at these events here, and then I'll talk a little bit about whether you want to be holding this stock into the decision for the presidency. So first of all, here is the debate with Biden. The stock had moved up and was relatively strong, and then people started questioning whether Biden was really going to be the candidate, and you saw the stock slipping lower because people started to think, well, maybe they're going to put someone else in that would be a better candidate than Biden, given his apparent issues with his health. Now, here is the Trump assassination attempt, the first one, I guess the critical one. And you have this big gap up in the stock, and then it starts to slide lower. And you have the debate with Harris there. You saw the stock gap down after that debate. Many felt that Trump wasn't real strong in that debate. And this arrow right here is when Harris took over the candidacy for president, and that started the downward slide as she gained popularity in the polls and Donald Trump lost popularity. The stock stood lower. Well, what's really quite interesting is I've been watching the stock very closely and trading it the last couple of weeks because it has been in a little bit of a bull market. It has been moving up quite nicely from lows here in the just almost $10 range to now pushing the $40 price range. So it's up 400% over the last couple of weeks. And that is perhaps an indication that investors think that he may win the election, or that he's certainly picking up in the polls. Polls can be kind of inaccurate. There's a lot of bias in polls. To me, the stock market is a very pure way to get people's opinions because people have to put their money on the line. It's easy to say yes or no, I will vote for this person, I will vote for that person. But when you actually ask people to put their money on the answer, well, that's a very different story. Now, I want to talk about whether this is something good to hold into the decision on the presidency. And I would caution against that. And the reason is this. The risk-reward trade-off is not really positive. Okay, so the market's moving up in anticipation of perhaps Trump winning. If he wins, you'll probably see the stock jump up on the news, but it's the old saying, buy the rumor, sell the news. When the news comes out, yeah, you may see the stock jump up, but then it'll probably pull back. Now, on the other side, if Harris wins, you will see the stock gap down significantly, my guess. Nothing is for certain, but that's likely what will happen. So on one hand, you're going to see a jump up that's maybe minor because the market prices it in before it happens. And if if Harris wins, you're going to see a huge gap to the downside. So the risk reward doesn't make any sense. In other words, if I said to you, I'm going to give you a bet. If you're right, you're going to win $1. If you're wrong, you're going to lose $5. Would you take that bet? Well, only if the odds were extremely high. And even then, it maybe doesn't make a lot of sense. So I think that it's a great trading vehicle. And as I said, we've been trading it a lot in my Stockscores Active Live service because it's been a hot stock the last couple of weeks. But what it isn't is a great trade into that election. Not that it won't jump up if Trump wins, but I don't think the upside justifies the downside risk. All right, let's get into this week's market analysis. We're going to jump into the Stockscores website now and pull up our first chart here, which is the S&P 500. It's been doing pretty well this year, of course, but in the last couple of weeks, it's been a little quiet. You can see sort of a sideways range the last little while, and volume has been a little light. And I think a lot of people sitting on their hands ahead of the election. Now, if we look at that 3-year chart, you can see the trend is up, the buyers are in control, so it's a bull market. If we look at the NASDAQ 100, not quite as strong as the S&P. It is not reaching to new highs. It's sort of stuck underneath this resistance level here. We've come up to that resistance level and likely going to go sideways there. A little concerned about this breakdown. It didn't last long, but I just think that the upside for the NASDAQ in the short term is fairly minimal. Let's jump to the Russell 2000, which is really much more interest rate sensitive. And as we go into the analysis tonight, you'll see more of a reason why that is a problem. But we'll first of all deal with this chart. It is building what's called an ascending triangle. What that means is that the buyers are in control. You can see the bottoms are rising, and that means buyers in control. But there is this ceiling price here, much like on the NASDAQ. So until we break through that ceiling, this is a neutral chart. It has a general upward bias, which is positive, but it's lagging the large cap stocks. So the S&P 500 is certainly doing better. Now, the key thing about the S&P 500 is that it is a market-weighted index. And what that means is the largest companies in the world have the biggest weighting in the NASDAQ index or in the S&P index. And so that's kind of what's holding the market up because they are not so interest rate sensitive. And again, I'll show you a chart in a minute which demonstrates the point about interest rates being a little bit of a problem for the broader market. Now let's keep going and look at the Canadian market. T.XIU is the symbol. And there you see bull trend, a little bit of a pullback this week, but that's reasonable in a bull market. You go up, you pull back, you go up, you pull back, you go up, you pull back. As long as the upward trend line is still intact, the buyers are in control. What about gold? GLD has been the hot market this year, and it continues to be so. I think it's risky because it's just gone up so much, but as long as the trend is up, you don't try to make sense of it. You just hang on. I would not want to be initiating positions in gold. You know, I know a lot of people are going down to Costco and buying gold. I think that's a risky thing to do, but perhaps it's a little bit of a safe haven ahead of concerns about what might happen around the election. All right, let's move along to oil. The USO is the symbol. And there you can see it's a choppy market, really lacks trend. I think it's a market that's kind of best avoided. It's not bad. Looking at the 3-year, it's basically sideways, but it's just trendless. And so it's not a place to make money right now. How about the US dollar, UUP? Here you can see a really strong rally in the US dollar through the month of October, and you'll see why on our next chart, actually second chart from now. I'm just going to look at Bitcoin first. GBTC, the general trend is still down. It's volatile, so there's a lot of uncertainty. I think that probably not the greatest place to be right now. If you look at the 3-year chart, it had this great run. It went parabolic. The parabolic trend was broken, and we've been kind of dead ever since, and that's why I've been either neutral or bearish on Bitcoin for some time. All right, let's take a look at the last chart, which I think is the most important one, and that is TLT. Now, TLT is the bond market, the Treasury bond ETF, and you can see how much it is sold off. Now, what's important to realize is when this sells off, What that means is interest rates have been rising, and I'm talking about the real rates that are driven by the bond market. And so mortgage rates have actually been climbing because the bond market has been falling and interest rates are rising. And that's why the broader market for stocks has failed to keep up with the S&P 500. And it's very simple. Those big companies like Apple, Amazon, they're just not that interest rate sensitive. But the broader market is, because higher interest rates affect consumer spending. They affect the cost of borrowing for these smaller companies. Apple doesn't need to borrow money. They got so much cash, they don't know what to do with it. That's not the case for a micro cap or even a mid cap stock where they're borrowing money to grow the business. And that's why these higher interest rates have a factor. So if we get into my ratings then, bullish on both time frames for US large cap. I'm still only neutral long-term on NASDAQ and neutral on both time frames for the US small caps. Canadian stocks and gold, bullish on both time frames. And of course, gold and mining stocks in general have a big influence on the Canadian market. So it's not a coincidence that they have the same rating. Oil neutral, and it's just kind of lacks direction. US dollar short-term bullish, long-term neutral. Bitcoin bullish in the short term, long-term neutral. And bonds bearish in the short term and still long-term neutral. All right, let's get into the trade of the week. This is an example of a stock that we traded through my active live service on Stockscores. You can learn more about that at stockscores.com. Another thing to just remind you, go to the Stockscores website. I do a free weekly newsletter every week with trading tactics, with stock picks. It's free, and you just go to the stockscores.com homepage and you can register for that there. All right, let's jump into this trade here. And this is a strategy I have called an early riser. It's a stock that was abnormal, which is something I love to see. It goes up, it pulls back, and you see this little blue dot there. That blue dot tells me that it's starting to break that pullback. And so the buy signal is at this white line, and the stock very quickly moved up to 6 times risk. So you see here, if we count these lines, 1, 2, 3, 4, 5, 6. When it goes up 6, I would put my stop in at +5, so this ends up making 5 times risk. So if you're risking $100 on the trade and that drives your position size, then this makes 500. If you're risking $1,000 on the trade, that makes 5,000 roughly before slippage and commission. So this is the kind of trade where we focus on the abnormal stocks, highly liquid, low float, very abnormal, and then we just trade these patterns. And these are the patterns that you can learn more about through my different courses and things at stockscores.com. All right, well, hope you've enjoyed this video. If so, do me a favor, click the like button, make sure you're subscribed to the channel, but most importantly, trade well.